Morning, everybody.
Good morning.
Good morning,
How's
Troy. Good morning, Matt.
How's everybody doing today in
Morning.
Finland and in Indianapolis and Knoxville?
The Vikings are doing well here.
Ha.
They're
I
eating
see.
the animals and living off the ground, off the land, as they say.
Rockets beat the Warriors last night. We're doing good. Let's do the Warrior Blues here.
Wow.
Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Well, it is day 4 of the trading week. We yesterday had some excitement, gapped up on some pseudo news, went up 180. Kind of reality set in, and we just kind of almost closed on the lows of the day. I mean, the last 30 minutes we had it definitely wasn't a strong finish. What'd you take of the market yesterday, fellas?
It continues to be a challenging market to trade. I mean, anybody who was holding overnight stuff saw a huge overnight kind of blowout level move. The move was so big. I had a automation that was going on later in the day, and I got a message, "Hey, your automation's not available. There's no strike." And I'm like, "What?" And I looked, and sure enough, it was a multi-day trade. So we had moved far enough that the market makers, there wasn't a strike for one of the long calls that I had in there. And I mean, I corrected it and just did something very similar, but that was how big the move was. I mean, we moved, and you see that sometimes when you have a huge overnight move that they just haven't made a strike. We have that huge overnight move. Then I don't know what the total candle range was. I didn't look, but again, I know it was at least another 100 points, I think, yesterday, or close to 100 points. So the 100 point candles are continuing.
Yeah, I mean, I think you bring up a great point, Matt, with the strikes. We move far enough, and they may not have 5 strikes or certain things. But it just seems like we got right to that, 5,500 level yesterday. And I mean, it looked like a blowout. Like, I mean, what's interesting is people who, if you had on some type of trades in the last 2 days, let's say an iron condor or a calendar or something like that, you definitely had the opportunity on some spreads. Like I had a balance fly on, and I'm a big believer, and I know at Options Omega, you guys, to have rails, right? That, hey, we may pull the plug on this at some point, right? And whatever that is. Well, students were having the question, okay, so what do you do when you have a trade on, like yesterday, let's say a balanced butterfly or whatever it could be, where because of the huge move, you had the move yesterday, so you're probably short dealt, or you had the move, what's today, Thursday, you had the move Tuesday, and then Wednesday we open up gigantically. You're already short deltas coming in, and it just kind of wipes you out, and you're at a max loss. So let's say whatever your max loss is, you're there, right? And people are like, it's that great question, right? The great question is, I'm down 30, 40% or whatever. Should I stay in?
Mm-hmm.
Right. And like, it's one of those questions, Troy, what should I do with my life? Or Matt, I'll tell you in 5 minutes. Here's what you should do.
It's very easy.
Yeah. Become a basketball player, play for Golden State or whatever it is.
Yeah.
But I think what's interesting is, sure, and some of the discussion yesterday was with some folk is, well, if there's enough duration, right? And this to me isn't exactly a risk management plan. If there's enough duration, I can wait it out until it comes back, right? And that's, I think, hopium at the best, right? That's like hopium. I have faith that we'll get another down market.
Yeah.
But, one thing that was on my mind is, okay, I had a position like that, a balanced butterfly. But if I was going to stay, the day, what I did is the day before Wednesday, I think it was, what's today? Thursday, Tuesday. I had a balanced butterfly and it was already short deltas coming into the move yesterday. Now, I didn't know we were going to go up a lot, but I knew if we went up 2 or 3%, which I think people should look at the end of the day, kind of a fire drill. Well, what happens if we go up or down 2 or 3%? So I saw I had more short deltas than I wanted. So I did a Rick as a hedge, right? A small position. I did a reverse iron condor because it's long gamut, gives me deltas on the way up. So that kind of saved my hide.
Yeah.
Because the reverse iron condor, there's no way I could have screwed it up. And that's why I like technical trading, because it keeps it in. But you made all your money and it offset most of the losses of the balanced butterfly. So I think with people, one thing I would suggest to people, when you have trades on right now, sometimes we don't always look at what are the deltas combined, right? If you're short deltas in 4 positions, you're in big trouble if we gap up, right? There's no, but I think it's, in this market environment, like Matt mentioned with the big candles, as Jack Nicholson says, can you handle the truth? Can you handle a 3% move up? And if you can't, you either have to do something to cut the delta. As I'm saying, if I'm looking at your 3 positions in SPX or 4 positions, something like a long gamma that can pick up long deltas on the way up, or buy a cheap vertical spread. We have to live, in the pit was a big saying. A lot of the guys in the pits didn't go to college, believe it or not. And they're like, I don't want to go back working as a bartender. I don't want to go back at, the shoe store. So you know what? I'm going to cut my deltas, because there was even with traders, you'd hear, a lot of stories in the pits, and these guys some of them were very smart, but it'd be like, what happened to Phil? Well, Phil had, instead of his vitamins in the morning, Phil took some smart pills, and he was leaning shorting this stock or with options, and it went up and he kept getting bigger. In other words, he was making his stand, right? And he's back bartending, right? Until, but it was almost like the Cool Hand Luke movies, guys, because it was like, you'd see these guys that were like legends in the pit. They took a stand, they lost their money, they needed another backer. So they would be making the rounds, and you can see them. And I'd be like to our boss, and I'd say, why was that guy in here? He goes, he's looking for another bankroll. It's like Cool Hand Luke. But the only problem is those are tough guys to back, unless did they really, hey, are you going to be a little more neutral this time? You promise you won't take a big, there's nothing wrong with calculated positions, but this guy didn't have like, okay, where do you cry uncle? So it was funny seeing a lot of these traders make the rounds, and some of them were extremely talented.
Yeah.
But, they weren't willing to say, hey, I want to live to play another day. It's like, are you willing to put your whole career on the line on a shot? And more than you would think of were, it's like, it's going to come down. I'm like, you sure?
Yeah. Yeah. If this call spread doesn't get out of the money, my kids are going to die.
I know.
Yeah, it's like, all right. Okay.
You really want to go down that road.
Yeah, you don't. let's look real quick at what the market's doing. The trusty market profile.
There it is.
So 2 things to note today. Yesterday's lows, we were within the overnight of yesterday, right? Because we gapped up pretty early in that overnight session. The next target, the downside target, really would be this on ES 5339 to if they can get back into that range, that's bearish. The upside target would be this 5,500, which is a pretty huge level.
Wow, that's a big, yeah.
And so, but that was a huge range yesterday. But unfortunately for all like me, all my long gamma friends, I don't think we're going to have that today. And here's why. I'm not a big pattern recognition guy. Way not smart enough for that. But I only know this because I put a bunch of long gamma positions on before close yesterday, and then immediately remembered. Last week, if you remember, Thursday, Friday was dead. Like inadvertently dead. And I do pay attention to short-term patterns where we have 3 big days of moves. And I really think with this overnight action, I think in this vol environment, I could see 40-point ranges today, 50-point ranges. But, a tweet could change all of it. But short of a tweet coming out, you look at this market overnight and say, I mean, as much as an inside day can exist with a VIX at 28, 29, I mean, I think this might be an inside day.
It's the Thursday that's like high school prom. There may not be much going on. Right? As you like to say.
Right.
Let me ask you, at the fifth, like yesterday's high hit exactly what Troy was saying. Well, they hit 54.99 in the futures, right? Yeah. 1 point under 5,500. Was the market at that area, Troy? Can you tell us a little bit about the volume and what, when it went up to that level yesterday, what do you see from a market profile?
Great. That's a great question. If you scroll in here, I mean, there was definitely volume at the top, but I mean, it definitely tapered. And I actually think more than kind of the natural auction. I think yesterday was so news driven. I mean, you get the thing overnight, basically Trump saying like, depends on how you read it, but basically like you get Trump saying, my negotiation skills are not working. We're going to lower the tariffs on China, and market loves that.
Go crazy. Yeah.
Market loves that. Yes. You had a follow up to that with Besant yesterday morning saying, we're going to lower it by half.
Yeah.
Right. Okay. Well, then it's just exuberance. Well, then the data of reality starts like coming out and saying like, when is that going to happen? Oh, I don't know. China comes out being like, this news, I mean, this environment right now is really tricky because the market is you get these big buyer programs, big seller programs that are moving the market on low volume. And I mean, like even yesterday at the end of the close, there's part of me that thinks like there's some manipulation going on. There was the report of tariffs being lessened for U.S. automakers. And then so market kind of has a little jump.
Yeah.
Almost immediately the White House comes out and says that's not true.
Yeah.
So I have a feeling, I mean, I've heard Bloomberg and them talk about this, that how this stuff works is they have people on the inside constantly leaking stuff to see what the market reaction is going to be.
Interesting.
Isn't that crazy?
And I do think that's part of the process too. And so,
I think what you hit, Troy, the biggest thing is, I think what you said about when you have some big candle days, more than any of the news stuff, but the big candle days, I think we're due for we're not, unless there's another catalyst, but I think it's just quiet a little bit, these big candles and it looks like we're kind of range bound to a degree, and you still have a decent level of premium, almost 28.
Oh, yeah.
I mean, that's not chopped liver, right? So you're still like on, especially mixed month spreads or right, Matt, mixed month spreads or people doing iron condors or credit spreads, you're getting a lot of room still, right?
You are, although this week the move was so big yesterday that I think most people trading overnight, whether it be a calendar or a condor or whatever, probably got blown out to the upside because it's just insane. I mean, that was a multi-% overnight move in the middle of the week. So
and
after a big move up before. So.
You can't avoid.
That's an internal discussion that people have in Option Omega land all the time because we're back testers. We trust the data, and there are people that are going to say, like, don't take it off. There's going to be people that say, I don't think there's a right or wrong answer to this stuff. I can give you my personal, example of, like, Tuesday, I had a 1-3 on. I put it on in the morning, and within like an hour, I had like 11% on it. Okay. So I ended up, vol was just kind of sticky all day. And so I took it off because it was already at the money. Like it was within 10 points of the long strike. The data, the test would not have been taken off from its guardrails if it was a normal situation. I took it off, and this is all anecdotal. I mean, there's 4,000 other examples where it's like, well, the next day I got 1,000% on that double counter. Cool. Awesome. You kept it. In this situation, I'm very glad I took it off because it would have been 180 points in the money.
What was the?
Yeah, I think mine, I had a 1-3 on, I think it lost 50 or 60%, which is an outsized loser because it was already near the strike or at the strike. And when you have a multi-100+ point move, multi-% move overnight, and you're already at the strike, there's just there's no mercy. All my double calendar tests have rails to exit. If I had held it later in the day, it probably would have come back into the profit tent when we had that big move down. But you coulda, woulda, shoulda. I trade them totally mechanically. So I took it all. The platform took it off per the back test, which is fine. That's what I planned for. If I had a crystal ball, obviously I would have waited till it dropped back down. It probably got profitable, I would think, or close to profitable again when we hit that. That
Matt, did it go on Tuesday or Wednesday? Your trade?
It was Tuesday. So just an overnight 1-3, but I don't have the point is for me, I don't have a crystal ball. My intuition is not better than the back test. If I did have a crystal ball, probably the background behind me would not be the blue wall, but it would be the blue seas of Bermuda.
But I think you can look with the data where I agree with Matt is if you asked me if I had a double calendar and I lost 50%, would I come back the next day or two? This would be my opinion. Absolutely, I would, because I'm betting that. And then I want to ask Troy, what was the number one reason he might have said that he took it off at 11%? But my thinking is the move that it took to take Matt out, right? How frequent are exactly those moves? They're very small.
They're very small. In 2025, they're somewhat more frequent. Well, but a random, you're talking a Tuesday. Usually when we typically have moves like that, they're over the weekend. It's typically not a Tuesday night with no move. But to take the conversation kind of full circle, I think the point is that we're still in a very headline driven market. I saw another headline about, these tariffs, which are clearly to some degree, to your point about leaking certain things and certain things, seeing how the market reacts. There was just an announcement I saw in the digital paper that, there's a big European drug manufacturer, and they just said, hey, we're looking at the tariff landscape. We're making a $50 billion investment in the US. We're putting a plant in India. We're expanding our operations. At least one of those plants is going to be in Indiana. We're doing this for tariffs, whatever. That's the effect that the administration is looking to have with the tariffs, is those kind of announcements. That's exactly what they're looking for. So, headline, one tweet, to your point, Troy, the market may be shaping up to look like an inside day or a not much happening day, which will be bad for people doing RICs and stuff like that. But one tweet can change everything.
And we're in a one tweet market. So
we are in a one tweet market.
I have no problem.
What was the number one reason, Troy, when you said my plan was to keep it longer. What was the number one trigger that you said, hey, I'm up 11%, I'm going to pull it?
This is not financial advice, and I wouldn't say do this. But I think, personally speaking, I had a lot of, and Tuesday going into it, I had a pretty good day already. And
Good point.
I noticed all day, everything I was buying, you could buy 100 point out of the money call butterfly, and I was taking almost everything off 30 minutes later for like a 5 to 10% profit, which is crazy. So that to me is, it's not a sign of anything in particular, but they were pricing in stuff weird Tuesday. And if you look at so to the point of trusting the data, I would say, like, if your data shows you that it's going to take you 1 day to get 10% and it takes you 1 hour to get 10%, maybe there's something in the data that maybe something's happening that we don't have a data point yet. And therefore I need to adjust. That's my personal thought.
You bring a great, if I could bring two, is it okay? Do we got time for two quick points? One, on what you said. I mean, I've always looked at, let's say you're going to try to make 10 or 20% or whatever your number is, right? But this is the way I've traded, but I would love to see the data on that. Is just say, look, well, what happens if something that normally takes you 5 days to get off for X%? What if you get it? What if you get 70, 80% of that in 1 day or 1.5? And so to me, it's always been, how quick is the money coming in? But the one thing I was just thinking about what Matt said, the only thing we used to do in the pit a lot, fire drill at the end of the day. So if I'm just using a double calendar for an example, if I had a double calendar on at the end of the day and we had already run up that day, right? So we run up that day, and this would be maybe an example of Tuesday, right? Tuesday was an up day. So I've got a trade on. We're already at the far right side, maybe even past the short strike. We're already starting to get in a bit of trouble. You with me?
Yeah.
We're already in a bit of trouble. And I look at my graph at the end of the day and say, well, I'm short delta. I don't have that much more room on the upside. Yeah. If we go down, I can handle from here to Indonesia on the downside, right? But if we go up 30, 40 points, I'm goosed. So the problem didn't start. In other words, in a big candle environment, maybe if you can limit, I don't know how the data, in a big candle environment, if you're at one end of the spectrum, past your short strike and a double calendar, how, sure, if we go down, you can handle SPX 150 points or 100, but if we go up, you're kind of on. So on a lot of times with those trades, if we're in a more volatile environment, I'm not saying all the time, I would cut the deltas. Sometimes I would cut them a little bit, but I agree with Matt. It's like in the middle. What is
there's no right. I mean, there's no right answer to it, and it's fun things that people talk about all the time, and both can use data. I'm very, very pro automated trading. I think it removes a lot of the emotion. I think in just this one instance, I mean, you have a delta that's already, because of vol, is already a pretty wide tent. And normally on an up move with a double calendar, you're losing vols. And so the up move really has to like get closer to pin usually to make profit. And within an hour, I was at the short strike and vol was up. That's a unique situation. That's a.
You mean yesterday?
Tuesday. I think that's what I think that's what they call in law school special circumstances. Special
that's
situations.
A good point. The volatility with the market, even in the, you think about it right away, it stands out that towards the opening when we were up, 150 points or whatever crazy number it was, you look at VIX and you say, that's it.
Yeah.
You're only down, you're down.
Yeah.
Yes.
But that's it. When you get crazy speed.
Yeah.
It's like the market's not buying it. They're like, that's why the vol isn't. If it went up,
the tool I want to build one day that's hard to build is a velocity. People measure it in different ways, but anyway, speaking of velocity, we should speed this up so people can get trading. So yesterday we looked at a test that is not that's still market profile. This is I told Dan, yesterday, I was not this guy. I was homeschooled. I was the coolest kid in homeschool, but I wasn't a bad boy that the girl said he just needs someone to fix him. I imagine Dan was on the mean streets of Chicago. And so this is a test that needed some fixing. It's a bad boy, but it needs some fixing. Shout out. And Matt, you probably know how to pronounce it. I always say Stephen, but Stephen V or one of our guys. Stephen. Shout out.
Our legend from the chat.
Stephen put in some work on this yesterday. But I want to show you real quick. First off, Matt's been playing around with it too. But basically what this is, if for those not familiar with orbs, an opening range breakout is a powerful strategy used by futures traders, but used by options traders, used by scalpers, used by discretionary, lots of different things. Different people are using, one could argue any type of technical analysis is an opening range breakout in some ways. And so this is at a fixed time where we set a 15-minute orb. So to the high point only. So we say, if we break out past the 15-minute high, we're going to buy a call and we're going to exit when the price moves down 15 points. Now, Matt, I'm going to share yours because we're going to start fixing this. And I say it needs fixing because that 80% drawdown, this thing right here, this little guy, that's not fun to look at.
That's a Mount Fuji.
Yeah, I don't like that. And you can logarithmic it, but it's still, there's a little bit of a Mount Fuji there situation. So Matt, what about this test? What is the lower cost ARB doing?
So to be honest, this isn't a fix as much as it is a different flavor of the Skittles rainbow. So what I looked at that last test, these are back tests, they're ideas, it's an idea generator. That was a more expensive, close to the money, kind of at the money 50 delta SPX. And so I was just thinking, how could you present this concept in a way that somebody who maybe didn't want to buy that expensive contract could play around with it? And so what this is a much bigger loser, to be honest, most of the time, in terms that you're going to lose more often. And when I say bigger loser, I should say more frequent loser, but your losses are smaller. So this is kind of a dip your toe into the orb pool. And here's the point. This is a very simple, this is not optimized. If you do it I haven't even played around with it. I'm sure if you do it at different allocations, change some parameters, it's probably very easy to break. But it's designed to show this simple concept. There are times when an orb, if you buy it, and most of the time you just let it go, right? A lot of times it's not going to win, but sometimes the winners are asymmetrical. And so if you look at this test, it loses 80% of the time. So most of the time it's going to lose. And I literally just did big Pareto type numbers, stop loss 80%, 20% exit slippage on the 1 minute. So you're getting out, you're getting hit exiting. And that's simply to say, hey, the orb has really failed. Let's just preserve a little bit of money. But what happens is you notice is when you get a winner, a lot of times the winners will be very nice. And so what has to happen for this to win? You have to have an orb. You're buying a 20 delta call. So think about how far out of the money that could be. Example, on February 13th, you can see it in the trade log. The orb broke out at 60.80, which seems like an eternity ago. We're closer to 50.80 now. So it breaks out at 60.82. You buy a 6,100 call. And then what happened? It kept going. So it finished 15 points in the money. So your $2.50 call turned into 15 bucks. And that happens. A lot of your winners, that's what happens. So again, this is not optimized. I just took a different back test that Troy had sent me and played around with the delta and the stop loss. So like I didn't mess with the allocation or the SMA or the gap. I didn't mess with any of that. It's just designed to show you that one simple concept. And here's the overarching idea that I think we can get to. The orb is a concept that's worth exploring. And there are many, many different flavors of the rainbow. And of all the back tests, which, there's a common discussion on the OO On the OO Discord, there's people who think, there's nothing new under the sun. There's only a couple types of trades. They've all been done before. That's true. It is also true that within these trades, there are basically an infinite number of iterations, variations, and nuances that you can do to them. So the things that you could change on this orb that is going to produce a wildly different backtest. You can change the opening time. You can change the SMA. You could change the gap up. This is a little bit fitted in that it has both a gap up and an SMA. But there's a bunch of other levers that you could tweak. You could tweak the stop loss. You could tweak the structure. You can tweak the delta. Like, there's literally a billion flavors of the rainbow. And for people who are concerned about, like, if they come up with an idea and then, somebody else posts a back test that's close to theirs and their edge is gone or whatever, I would say that the orb is a really unique and interesting concept because there are so many different ways to make a green positive expectancy back test. And this is not, there's a lot better orbs than this. I wouldn't trade this one myself. It's designed to show you this concept that even at a 20 delta on an orb breakout, you can have some pretty asymmetric winners. And if you look down at final thought, if you look down on this, there's no profit target. But if you look at the profit, some of these go for a big profit target and then come back to lose. So just another idea, another idea, something you could look at to play around with this bad boy. So,
and to improve the bad boy, shout out Steven. Steven, you got some swag coming your way for the work done on this. Let me share this. Now, I took some of this and ran with it. So if you don't like this trade, don't blame Steven, blame me, because I took some stuff and ran with it. But one of the things Steven had played around with yesterday was doing gap ups. To Matt's point, he just showed one. But if you look at the bad boy, the bad boy had a MAR of 1.6. We took this bad boy to 3.4. And as we said, once you're in a 3 MAR, things start getting fun a little bit. And so what we're doing on this is the same trade as before, except for we've done one thing. We changed it to an hour breakout. And I think that's the right move. From our testing, we talked about this from yesterday. That is how a lot of options traders I've seen play the breakout. That's how Market Profile breaks it out. I think a lot of futures traders will do 15 minutes. That's cool. We're not futures traders. Shout out. But we have found that the hour works best for at least the high only. And this is a trade you're allocating 5% portfolio. Don't listen to us about allocation. You have to talk to your financial advisor about allocation. But we've done a couple different things. Again, shout out Steven. Gap up, mid, anything. So if we have gapped up, where are we at right now? We're up $2.50. That counts. $2.50 on open. That would be a gap up. At 10:30, we wait an hour. And we basically say, starting at 10:30, that next 30 minutes, anytime between 10:30 and 11, if we break out of the first hour's range, we're going to buy a call. It's a 0-day 50 delta call.
Yeah.
He kept the guardrails, which is interesting. We're going to exit when the price moves down 15 points, which is a tight stop. It's not a stop, but it's a tight guardrail.
Yeah.
And we're going to exit. Really. Oh, and one more thing. This is kicker. This is actually really important. We're giving away some of the sugar that a lot of testers have spent a lot of time on, but that's what we do at the OO show is we gift alpha to those who got up early to listen. So I'm going to I told you, I'm just to start using gift alpha as much as I can. Anyway, 3-day SMA is kind of a filter, which basically says like, are we kind of in an uptrend? That's all it is. It's like a 3-day filter. Be like, are we kind of above? Where, you don't want a bunch of choppiness where it's like down day, up day, down day, up day. You kind of want to have some sort of sense of like, are we trending a little bit? And so, guys, we're running out of time, but what are your thoughts on this?
Yeah, two quick thoughts. One, for people like for me, I'm a little more wimpy and something like this. I might feel more comfortable. The test, everything is fine, but I might use like a 20 wide call vertical debit spread.
Yeah.
Right. It'd just be cheaper. And I might even say I'll go over 2 days. I don't know. I play with that a little bit. So I think there's different ways to get long, right? And depending on your risk tolerance and how you handle things, that's important. That's important. The other thing I want to talk about, for people who, I was in the trading pit in the CBOE for about 20 some years, and then I've been teaching retail for 20 years. And I don't want to break anybody's heart here, but butterflies, 40 years ago, they were trading butterflies and they were trading calendars. And I didn't invent any of them. No one else. But I'll tell you what, and what I've seen to this day, who the best guys at the butterflies were? I hate to say this. This is going to hurt all of you, but it's the guys who kind of traded the most, right? They just kind of looked at it like, that's why, I'll talk to Matt on, he's trading thick or thin. He's trading what he let's say double calendars or whatever the trade is, over and over and over. And in spite of ourselves, we're going to learn a ton from that. And there were guys that I knew quite a few traders, and that all they traded for 20 years, 8 hours a day, was a butterfly. That's it. Right now, they used it because because again, as a market maker, you're making markets all day. So a butterfly was actually used. The origin of the butterfly was a great mechanism because it's kind of a stable relationship. If you buy 20 wide, 30 wide butterfly out of the money, they're not going to move, they're not moving every tick, right? They're kind of stable. So guys would, they'd make the markets, use this to make the markets, but then they'd accumulate, because you could buy on the bid and sell on the ask. They'd accumulate these little, I call them time bombs. They'd buy some out of the money butterflies. They'd have 1,000 of them that they legged in for 20 cents or so. I mean, outrageous. But all they needed was that one day, right? 1 or 2 days as time developed, that they would come in, and you'd see them like foaming at the mouth. They'd be like, I got 1,000 of these I want to unload. And that was their whole month, right? So, but it's like patience to get these cheap butterflies on, and they'd buy thousands of them. The good ones. And so it's just, it's getting the one thing I would just leave people with is, jack of all trades, master of none. Stick with something, especially if you've got a good back test, you've done the data on it, and you start doing it. Don't leave it. The minute you lose a couple days in a row, you'll be sorry. If it was good data, then start. If you're not coming back after 2 days, I'll tell you what the problem was. The problem was you were too big a size.
That's right.
Put a small enough dollar amount that you won't cry uncle, right? Yeah, I mean, that's what I think. I don't mean to go back to the president here to end this thing, but it's like, I think he cried uncle, right? Yeah. It's like, hey, I got all this. Here's my talk. Nobody's coming back and caving in, and so he ended up caving in. Now, I don't know enough about that if that's the case, but I think, with the once you've done your data and it's a successful back to stay the thing, because people are always, their justification is, what? The market's changed. It's new. It's, everything has changed. I don't know. In most of the case, it's not. I'm not, I haven't seen anywhere it's like, this is a new time. No. I mean,
that's right.
Those things have anyways.
Well, no, and to the point, that's a beautiful segue we'll end on, is tomorrow, because we've done some orbs in our life, Matt and I know, and some other people, we're going to take the MAR to 11 tomorrow. So we're going to show you a really good trade tomorrow. I'm excited about it. We'll end on a high note. I don't know the next time we'll be able to trade this, because we can't hold a rally to save our lives the first hour. So
that's true.
But
Troy, is there any way we could get? Is there any way with the subject of orb tomorrow? Is there any chance for a Roy Orbison song? What do you think?
Oh man, yeah. If I could get a guitar, you
and Matt play a little Roy Orbison. What was his good song? I forgot.
Pretty Woman.
Oh yeah, Pretty Woman. That's right.
Oh yeah,
sure is.
No, we can probably do some Pretty Woman tomorrow.
Roy Orbison. All right.
So, well, guys, listen, it's been fun. we will touch base tomorrow morning. We'll see if the market, I'm calling it, market's like my Tesla call, just 50 points wrong direction.
Hey, who won the Tesla thing? Did I win?
What was yours?
251. I think I did. Well, I don't know. What were you measuring? Open?
Yeah,
or?
you're probably right. I think you're probably right.
Boom.
But anyway,
Showcase showdown.
But I will say, as someone who hopes this isn't the case, I hope I'm wrong tomorrow. Inside day today. So